Hey, what's up everyone? Bill Lethman here for MoneyEvolution.com. In today's video, I'm going to be talking about how to calculate your retirement savings goal. So probably one of the most frequently asked questions that we get asked here all the time is, how much money do I need to have saved up for me to be able to retire and live the lifestyle that I want to live? Well, there's a couple of different methods for doing this, and one of the things we've talked about pretty extensively here on the blog and on our video channel over on YouTube is going through our expense worksheets. In fact, actually, if you haven't already checked those out, we'll have a link below today's video so you can access those. And that's where you're going to basically go through everything from your housing expenses, trying to estimate your utilities, your car expenses, your travel, and really kind of going through the nitty-gritty of that. What I'm going to do here in today's video is we're going to kind of take a completely different approach to this. I think it's a little bit of an easier approach where we're going to get to that final number a little bit faster. And what it's also going to do is give you an opportunity to kind of compare the number that you come up here in this approach that we're going to do today and maybe compare it to some of those worksheets. So I still think it's a very good idea to do both of those together. Okay, so here's how we're going to do this. We're going to use a hypothetical couple that's earning, let's say, $300,000 per year. Now, obviously, your income might be higher than that, it might be lower than that, but here we're just going to kind of keep things relatively simple here and use $300,000. We're also going to assume that maybe we have a husband and wife and that they're both earning $150,000 per year. So we can keep this, again, flowing along pretty simply. So one of the questions that gets asked all the time is, whatever your level of income is while you're working, is how the heck am I going to replace, let's say, $300,000 if all of a sudden I retire and I no longer have those paychecks coming in on a regular basis? So that's what we're hopefully going to uncover here and look at some of the expenses. Obviously, we know there's some expenses coming out of our paycheck. Every time we get one of those, there's taxes that come out of that. And we're going to kind of dive into a little bit on some of those numbers here. So let's take a look just at one of the two of them. Their situations here, the $150,000, and we're going to assume that they're maximizing their 401k contribution. In fact, we're going to assume that both of them are maximizing that, and we're also going to assume that they're over the age of 50, which means that they not only get to do the 2019 maximum 401k contribution of $19,000 per year, but they can also do that additional $6,000 catch-up all the way up to that $25,000. So that leaves them with $125,000 of taxable income from federal taxes, let's say. Okay, now the next thing we want to do is we want to look at their FICA taxes. So those are the Social Security taxes, and those get assessed not on our federal taxable income of $125,000, but they get taxed on the full amount, so before those 401k contributions. However, there is a limit to how much the Social Security tax can apply to, and so for 2019, that's $128,400. So what that means is that regardless of how much income you actually have, you're only going to be taxed that FICA tax on $128,400 of your income. Okay, so your FICA taxes are going to be 6.2% of your total income, again, maximized at that $128,400. So for them, and they're each going to have that because they each have $150,000 of income, so they're both going to have that 6.2% apply to that $128,400, and so that multiplied out works out to be $7,960. Okay, the second type of tax that comes out of our paychecks is the Medicare taxes, okay, and that for 2019 is 1.45%, but it's on our entire income. So it would be on $150,000 for each of them. So regardless of whether you make $150,000 a year or you make $1,500,000 for the year, you're still going to have to pay that 1.45%. So on $150,000 of income, that's going to work out to be $2,175. Okay, and then when we add those two numbers together, we know that they're paying between Social Security and FICA and Medicare taxes $10,135 each. Okay, so a little bit over $20,000. Now the next thing we want to do is we want to look at, okay, well, what are the federal taxes? Okay, and so we can calculate that as well. And so their federal taxable income is going to be $250,000 for the year. And how we got that was it was that $300,000 of gross income, but then we subtract, assuming that they're putting that money into the pre-tax 401k, we're going to subtract out those 401k contributions of $25,000 each. we're going to assume that, let's say their house is paid off, and they don't have mortgage interest and deductions and things like that, and they're just going to take the standard deduction. So for 2019, the standard deduction is $24,400, which means that after taking that out, $225,600 is going to be subject to federal income taxes. And then we have a progressive tax system, so part of that income is going to be taxed at 10% and 12% and 22%. And by the time we run that through the entire tax table, they're going to have federal income taxes of $42,347. Okay, and then let's add back in our FICA taxes and Medicare taxes, so $20,270. And those are our total taxes, our deductions from that base income. And after doing that, we end up with $162,983. Okay, so now that's a little bit closer to what they might actually be living off of. Of course, there's some other factors that might go into this as well. If they're maybe paying for some things that they have expenses now that they may not have in retirement, we could maybe subtract that from that number. Or if maybe they're funding another account, they're putting money into another savings vehicle, we could deduct that. And basically what we're trying to get to is the bottom line of how much they're actually living on. And divided by 12, which is a good idea to do, so we can get that down to a monthly figure, we get to $13,581. Okay, so hopefully that made sense as we're going through some of these calculations and how we got to that number. We're just really trying to get to the bottom line of how much you might actually be living on. And so the first thing we want to do, if you're doing this for yourself, is does that number make sense? Does it appear that if I had, in this case, $13,581 coming in on a monthly basis, am I going to be able to make all of my bills and expenses that I think I have right now? And that should be something that you should have a general idea right off the top of your head whether or not that makes sense there. You also might want to, again, compare that to maybe if you did some of those expense worksheets and see how close that number matches up to what you actually did when you went through and itemized out my cable bill, my cell phones, my gas bill, electric bill, and things like that, and added all that up. Does that come anywhere close? And oftentimes what we find is that when you go through the monthly expenses on those worksheets, it doesn't come anywhere close to that. And what that tells us is that you missed some stuff. And I did this on myself. I missed a whole bunch of things. You know, I said, well, wait a minute. I added up my expenses, and it was this, and my take home is this, and where is that disconnect? And then you think, well, there's things that come up all the time. That's right. We had to have somebody paint the kitchen last year. We had to replace a dishwasher. You know, all those things come up that we don't oftentimes think of right away. Now what we want to do is we say, okay, if you need $13,581 per month, how much money do you actually need to generate that? So the one thing we want to look at is Social Security. And that's, for most people, going to be a big component of your retirement, regardless of your level of income that you might be at. And so for this couple here, because they're making $150,000 each, we're going to go ahead and assume that they're going to be at the top end of what you can earn from Social Security in retirement. And so for 2019, the biggest check that you can get from Social Security is $2,861 a month at what's called your full retirement age. Okay, and so for most people watching this video, that's probably going to be age 67, but that's your full retirement age benefit. Multiplied that by 12 is $34,332 per year. There's two of them, so we're going to multiply that by 2, and so that's $68,664. Okay, so now what we can do is we can kind of go back to this number, which was the grand total of how much you need. It's basically that $13,581 multiplied by 12, and we could subtract $68,664 because we have at least one source of what we oftentimes refer to as the predictable income stream from that. And after taking that out, we have a gap, in this case, of $94,319. Okay, so that tells us how much money you might need to pull from your investment accounts in order to live that lifestyle of $13,581. Now, of course, there's other factors that would come into this that would get way too complicated to put on a whiteboard here. We've got inflation. So we know that although you might need $13,000 a year to live on, or a month to live on today, that's going to go up and get a little bit more expensive as time goes on. Even at a small 2 or 3% inflation, that's going to really tend to add up. If we need $94,000 per year to pull out of the investment accounts, if we're taking that from a tax-deferred account, where we're going to have to pay taxes on those distributions, we might need to take actually a lot more money than that out in order to pay those taxes and still have that $94,000 left over. But one way we can kind of do this, just a quick rule of thumb, is to use something called the 4% rule. And you may have heard of that. You may have even heard me talk about that because we've talked about it pretty extensively. And it's just kind of a real quick, easy rule of thumb to say that whatever amount you have in your investments, if you took out 4% of that per year to live off of, you should have an above average chance that that money is going to last you for the rest of your life. So we can actually work that number backwards. And instead of multiplying our grand total by 4%, we can divide how much we need by 0.04. And what that's going to tell us is that in this case here, you might need $2,357,975. And again, that's just a quick and easy rule of thumb. Again, it doesn't count for fluctuations in the market and things of that nature, but it is a good place to start to just give you kind of a ballpark estimate of how much money you might actually need to live on. And again, we really haven't accounted for taxes. So we don't know how that money may be allocated. That could all be sitting in a Roth IRA. In that case, it's all tax-free as that money comes out, as long as it's a qualified distribution. Or if it's all in tax-deferred accounts, there could be a lot of taxes, and that number might be, I think I did the calculation earlier, it was actually over $1 million higher. So it was about $3.3 million to get that same level of income if that was all in a tax-deferred account. So there you have it. I hope this kind of makes sense. It's another way to kind of go through and try to make some calculations on how much money you might need for retirement. Again, if you haven't already, I encourage you to go check out our worksheets, and I think we've got some videos that go along with that. We'll put some links in the description below this video here today, so you can go do that. And it's just a good way to kind of double check things, especially for those of you that might be getting closer to retirement. And if you want to learn a little bit more about some of the financial planning that we do, we have something called a Wealth Vision Comprehensive Financial Plan. We'll put a link to that as well. And if you like, we can have a quick intro call and see if it's something that might make sense for you. So with that, have a great day. Thanks for watching the video. Don't forget to hit that like or subscribe button, and we'll see you back in one of our next videos. Thanks.